This is something that I've learned, that you attract the kind of people who you are, right? So be the energy that you want to attract. Throwing money at problems doesn't work. You can't pay your way through challenges. What do you spend your money on and how do you spend it becomes extremely important.
Welcome to the Indian Silicon Valley podcast. I'm your host Jivraj, and today I have with me a very interesting guest. Join me in welcoming Jeet Marwadi, the founder and managing director of One Finance. Thank you so much, Jeet, for joining me. Very excited to be hosting you.
Thanks, Jivraj. Happy to be here.
Great. I think much of my fascination for this conversation comes from the fact that you have a super interesting background that stems from very core understanding of business, and what you're now doing is solving a very interesting problem that hasn't been tackled in the way you are approaching it, which is the world of personal finance. And before we dive into your background, your way of building One Finance, why don't we talk about the problem itself, right? Personal finance is a very easily used term, yet poorly understood in my opinion. Why don't you tell us what are the problems in personal finance and how are you going about it?
Right. Very interesting, I think, the fact that you describe personal finance as something that's lightly used, and I agree with that. Because personal finance has been limited to budgeting, expense management, but I think it's a lot more that we have sort of culturally chosen to avoid or not really get into the depths of. So I would like to use financial planning as a term that's a little more useful when we talk about personal finance, right? It's a combination of what you earn, what you owe, what you own, etc. So you can separate it with respect to your, say, assets and liabilities. You can look at it in terms of income and expense, right? So there are these different ways with which you can manage your individual personal finances, right? And when I say individual, of course, family also comes into it. You can add on other individuals to the same individual personal finance plan. It's not been done methodically. I think personal finance has been linked so much to income and expense that the asset and liability almost gets mixed and lost. For example, net worth, right? The importance of net worth is also not very well understood. What building a good net worth helps you achieve as an individual in terms of your financial capabilities is also not very well understood. So talking a little bit more about the problems, I would say that culturally and in terms of a civilization, we are a very old civilization. But when it comes to awareness to certain practices and certain laws of accounting, right, I would put it like that. Laws of accounting is what personal finances uses, effective personal finance management uses. And some of the problems that I see that have studied and in fact extensively with the access to customers that we've had at various different companies, the access to knowledge, of course, with my background in economics as well, is that there is a lack of qualified advice, right? A lack of understanding of how effective financial planning can happen, because I'm so busy working on building my income, right, that I don't have time to study in building a good personal finance management system for myself. That's one problem. The other problem, I think, is of so I said lack of awareness and education around what personal finance and financial well-being is and how to get there. Two, the lack of time to do that. And three, the lack of qualified advice. When I say qualified advice, I'm not merely just talking about certification that someone may have to give you advice on something. I mean, it hasn't been possible to do holistic financial planning until now, but now it is. Thanks to the innovation that the government of India with their iSpirit Foundation has brought with, the account aggregator ecosystem, right? And I can delve into that more. But the point is, if I'm not seeing the full picture, then how am I going to effectively optimize something? So qualified advice here means having the ability and the means to understand an individual first before saying, oh, here are the 5 best rules to become the fittest in the next 3 months. It's not a it's not a short-term hack that I'm referring to here. It's a journey.
Absolutely.
It's a mindset shift. So when you want to achieve something consistently for a long period of time for the right reasons, then you have to ensure that your mindset and your behavior is matching that. Right? And so a lot of it is coaching. When I say qualified advice, it's also coaching. Coaching from someone who has the understanding of financial instruments, is also on top of what's happening in terms of regulations of those financial instruments, because they have a
It's changing.
enormous impact on
Yeah.
what you're able to get out of it. So, a couple of years ago, a very good sort of asset management company's mutual fund went bust, right? They couldn't allow their investors to withdraw their investments.
Yeah.
And this is an asset management company that is global in repute, one of the largest in the world. How does that happen? And how do you ensure that you don't, not that you can avoid it for sure,
Yeah.
because anything can happen and there are always gray areas and black swan events and possibilities that we don't have to account for,
but you're
even as a
ready for
global
it.
system. Yeah, but you're ready for it. And you're almost factoring that
The
to happen,
possibility.
the possibility for it to happen, so you're at least safeguarding.
Yeah. No, that's very interesting. I think a lot of crucial pointers that help us bridge the understanding of what personal finance or financial planning entails. I'll get to the solution after this, but why after is because to understand how you're approaching this problem, I think understanding your background is also very crucial, because One Finance is a new age company built on top of old fundamentals that stand the test of time. This is a bootstrapped venture, unlike the popular new age venture backed companies. This is a tech company with the approach of also having services like mindset, because that is also important. Talk to us about your understanding of business, right? You come from a family which also has seen a lot of notoriety in terms of business acumen. So if you can give us background from where you come, your early influences of business, and how you're approaching building One Finance, I think that'll be very helpful.
Sure. I mean, one of the first personal projects within the realm of business that I had was in fact in 6th grade. So I was happy to have a personal computer back then, and I had a lot of access to a lot of good quality games, right? So your GT, the racing game, Need for Speed, and then a couple of others, Grand Theft Auto, GTA, Counter Strike. So what I did was I was making copies of those games, although it's illegal at that point. I was quite naive, so I made copies of those games and I was selling it to my friends and my classmates for a much cheaper price. And I remember in 6th grade I had some 30K that I had saved up through this business, and I wouldn't call it a business, but this little trade that I don't know, I feel like being surrounded by a family that's immersed into business. Of course, lucky to be born in a half Gujarati family. My mom's from Bangalore, so she comes from a Telugu background in that way. But lucky to be born into the family where business and trade is something that's day to day. And so learned a lot about fundamental principles of good business, and in terms of access to just experiences from my father and his two brothers and my grandfather, who were like the founding sort of fathers of all the group companies that we are a part of today. Financial services being the most prominent one, and the flagship business of the group. Had access to wisdom, right? And it wasn't that I was sat down and I was told that today we're going to learn a lesson on business.
It was just second nature. It's in the blood.
Yeah, I think you can say it's in the blood. It's also in the air, in the sense that I'll give you an example, right? So yesterday I wrote a thread on Father's Day, and I was talking about one of my favorite memories with my father. And the memory was when we would go travel abroad, or we'd go to one of the theme parks like the Disneylands, right? The way he would sort of navigate the massive theme park was making sure that in the least amount of time, most amount of rides could be experienced and completed. So it's in the experience of how things were done with me and around me that I know how those translate to, you can call it efficiency, you can call it time management.
Right.
I mean, you can spin it in many ways, but I think those fundamentals of good, effective time management also seep in. Right?
No, that's very interesting to note. Why don't we double click on that for a moment? Because you mentioned old fundamentals, you mentioned a wisdom in your answer. What were some of those other learnings, right? Like efficiency is one, but what are some learnings that stand the test of time that you use to date when building One Finance?
There are many. I think one of the core ones that I've experienced is that relationships matter more than anything else.
Okay.
And what I mean by that is people and the sort of value that you exchange with people in terms of camaraderie, in terms of a sense of belongingness, in terms of a sense of achievement, or being aligned on an objective, on a common goal, is way more important than the day-to-day sort of exchange in that sense. So there's always something bigger, more important, seems invisible but also essential. So relationships was one of the key fundamentals that I use even in business. And working on those relationships is extremely important. Whether it's your co-founder, whether it's your a core team, whether it's anybody that you're working with, working alongside, it's not a zero-sum game. Your win is not their loss is not your win. I mean, that's to be understood. If someone is on your side, and you're on the same side, then how do you ensure that you continue to remain on each other's sides and back each other, right, in times of difficulties? The other fundamental, I think, is that you focus on the general laws of business which are defined. That's not necessarily codified somewhere. It's something that exists and generally is understood. So this is something that I've learned, that the kind of people you attract, the kind of people who you are, right? So be the energy that you want to attract, right? And this is something that I use. If I want to attract someone who is ambitious, who is sort of committed, then I need to be that first.
Absolutely.
Then the right sort of people will join, right? So that's another one of fundamentals that I follow. So one of the core learnings have always been relationships, managing relationships with people and making sure that you're working alongside, because you can't clap with one hand, right? And so it's not a solo game, especially when you're building an enterprise, when you want to build an institution. An independent proprietary organization is not transferable. And from the foundation itself, I was very clear, and my family and the Chandarana family also was very clear, that we want to build an institution that is transferable, that can grow, and stand the test of time. Otherwise, the individual's limitation becomes a limitation of the organization, and that's something that we really wanted. The other one of principles or fundamentals that I may say has been knowing that people are in it to work for money and a good life for themselves. So understanding that paying people well, paying people at the right time, not withholding their payments, etc. Whether it's a vendor, whether it's a partner, whether it's an employee, right? So money management is also very important. So managing your own capital, ensuring that your capital is also being managed well for others, like when it comes to paying for your obligations. That's something very fundamental as well. So prudent financial management of your organization and your enterprise also extremely important. Those are a couple of them.
No, that's awesome. I think relationships and financial management for the org. Coming to One Finance now, right? I think in the introduction of personal finance, financial planning, you mentioned how this is a very multidisciplinary problem, and especially when each individual has their own, objectives, desires, income, etc. It seems like a decently challenging problem to solve for. What I'd love to understand is, how do you approach this problem statement backwards, And as a customer or a potential customer, I look at the end result. But what do you need to make happen as an organization on the background to function effectively would be really nice to know. So if you can tell us all the behind the scenes of approaching this problem statement and giving us, that magic moment, the result, that'll be very, very interesting to note.
Awesome. So let me be honest, it's not a magic pill, right? We're not working on a magic pill that if you spend X amount of hours with us and with our team, then you'll have the best possible financial situation for yourself. It's a journey, and it's a journey in which you have to commit first to the long-term evolution of your own personal self with respect to your finances. So in a lot of sense, we are in the business of behavior management towards finances. Right? And so the way we have sort of worked on this internally is we have your financial instrument specialist. So you've got your on the asset side you have your equities, you have debt, etc. On the liability side you have the various different loans. On the protection and sort of emergency side you've got your insurances. Then you've got managing your expenses, another aspect. So these various dimensions of a personal finance, right, of an individual is something that we map, we study, and then we chart a path in which your cash flows are plotted against the most important objectives, right? And the way that we define important is based on, of course, your individual self and what your current financial standing is. Now, since we are building for a very specific group of individuals, right, the solution is currently focused on someone who is a middle net worth individual or is an emerging affluent individual, someone with a compensation of 25 lakhs and above, someone who has some savings, someone who has some financial exposure in terms of credit card exposure, in terms of income, expenses, even a little bit of liabilities, as someone who we think deserves such a robust system. And so we're not heavily reliant in terms of technology on some mad science. Of course, we deploy quantitative strategies, right, and modeling to ensure that we give a quantitatively successful and clear answer to you on what your options are as an individual. But beyond that, we're not currently using any sort of AI or machine learning or any of that. In fact, one of our team members had on one of the FAQs written that we use AI and ML, and I had lost it at that point. I said we've never said that we use it because we don't know how to use it, and we don't use it, and we don't need it. Right. So in the world of noise, right, it's very difficult to stick to your fundamentals. I think that's another problem of managing your finances well, just getting lost in all the noise. There are 10 different qualified individuals giving you 100 different approaches to your problem without even knowing you.
No, that's very fascinating to understand. And what I'd be further curious to know, if we can put this into perspective. So if you can do like a almost active mental exercise, if you had to look at an individual who's, let's say, earning, I don't know, 2.5 lakhs a month, right? That equates to some 30 lakhs in annual income. What is this person's customer journey in One Finance, and what are stages with which you will capture this? What will be the output? If you can put this into perspective, I think that'll be helpful for the audience.
Amazing. Yeah, sure. So first thing is, what is your personality towards money, right? And we've got a patent on it as well on our money sign, which is a personality assessment towards your finances. And what it does is it basically helps. It's a 6.5 minute questionnaire that you do on the app. You download the app, you register yourself, and it takes 6.5 minutes to complete the assessment. Then it gives us a money sign. Now that money sign basically shows your strengths and weaknesses, basically shows your biases that you'd be prone to, and biases that you can use for in your benefit. So now when we give you advice, right, that advice is tailored to your psychological framework that you operate with. So that's as close to your psyche as possible, so that you can easily stay the course. The problem is not receiving effective advice. The problem is following on that advice day after day, event after event. You know, MRF stock went up to 1 lakh rupees and per share, and I want to, you know, now I'm excited, now I want to buy it. Whether or not it's a good buy for you or not, whether or not active investing is a good option for you or not, is something that you need to contemplate and assess and review.
Got it.
So we do a holistic understanding of your personality with money. Then what we do is, then our financial concierge specialists, basically they are CFPs who are basically certified financial planners or certified wealth managers. They do an orientation session with you and make you understand the process of financial planning with us. Because the Indian consumer and the Indian user is used to investment management, most of them and most of us presume that financial planning is equal to investment management or investment planning. So we have to ensure that that basic 15-20 minute orientation happens to how the process is different and what holistic financial planning consists of. It consists of obviously investment management, but it also consists of liability planning. It also consists of understanding your net worth. It also consists of understanding your assets. It also consists of understanding your income and expense behavior, right? So we do this orientation for about 15 minutes where you know, our concierge specialist explains to you what the process is, so that you are confident that you want to do this and get started on this journey, because it involves a lot of time and energy from both sides. Then we send you a form wherein you fill out your important financial information that you are okay to share with. And of course, there is automated ways with which we get certain information, and certain information, for example, how much gold you hold, I can't pull from anywhere even with your consent, because that's not electronically available anywhere. So once I have a understanding of your numbers in terms of your financial standing, I also run the algorithm. When I say algorithm, it's a algo, it's not AI, it's basically a quantitative model. And it tells me on all the 6 or 7 ratios that are important and essential. We call it the financial vitals, right? So your debt to equity ratio, you know, or your, for example, good liability linked to EMI ratio. There are a lot of these ratios that are essential for your prudent financial management. We look at all these ratios, and then we see whether you are overexposed to anything or underexposed to something. And then we map the advice accordingly. Now, a key aspect of this is also that we assign a financial advisor to help you understand the ratios and to help you prioritize what your financial goals can be and are. I mean, you know, I can wish for something, or I can afford to have something in a certain amount of time. So that realistic expectation setting from my own self is what the advisor helps the individual achieve. So in that consultation call, it's a proper, you know, consultation approach where the financial advisor, the qualified financial advisor, takes you through the financial wellness plan, which is, you know, made, and has a conversation with you whether this makes sense to you or not. So the action items in the financial wellness plans is essentially your cash flow planning for the next 3 months. Now, if you don't have adequate insurance or emergency funds, then the first step always, no matter who you are, is always to have adequate savings for your emergency in an instrument which is safe and liquid, so that your capital for that reason is protected. Right? So, and then of course the level of complexity in terms of what you want to achieve then can be added on. But hygiene has to be maintained first.
Absolutely. Got it. So then there's this money sign, then there is a sense of assessment, then there is the financial wellness plan, and then there is the customer journey. What's interesting is it seems like you work with a lot of different disciplines, right? So you have this, you know, expertise in saving, in investing, in investing also, there are these multiple disciplines. I'd be curious to know if these disciplines are something in terms of capabilities that you build out yourself, or do you work with different partners? If you work with different partners, how challenging or easy is it to align everybody together? Because this looks like there are specific solutions for equity market participation, debt market participation, gold investing, blah, and etc. Right? How do you navigate this space behind the scenes?
So the core of why we exist and what we do is effective financial planning, right? And of course, since we're an ecosystem, we have various entities and individuals and partners who we bring on board to ensure that you as a customer receive the best advice and the optimum sort of advice covering your sort of best interest at heart. Now, the advisory engine is such that without ranking and rating a financial instrument, it's very difficult for an advisor to give advice on what sort of allocation you should have to which instrument. And within that instrument, which scheme, which sort of stock, etc., to purchase and have in your portfolio. For that, only machines can do the job. And for that reason, we do that completely in-house across all assets and liabilities, right? We get specialists on board whom we work alongside with, but those are engagements that are specific in nature, and then they don't always last for a long period of time because everything that's essential for us and for the customer, we own it in-house, and that's essentially our intellectual property.
Got it. Perfect. No, that makes complete sense. Since you have these diverse people working at Mind Finance because of this reason, how do you think you've curated the team culture aspect of things, right? Especially because these days venture funded startups attract a lot of media attention, which directly translates sometimes to the kind of talent you are able to attract. But how do you approach talent acquisition as well as retention, considering the diverse problem statement?
So see, we are very fortunate in some sense because while I agree with you that the venture funded startups receive a lot of love publicly and with the larger media ecosystem and the journalists, the journalism ecosystem, what we are building is so core in terms of finance. Is that so we're not pure techies building a finance app or a finance business. We're people who have a fundamental understanding of business and finance and people and their aspirations with their money, using tech as a medium, right, to deliver the right solution.
Right.
So since we are so fundamentally aligned to the way that finances work, we've been able to attract the right talent. So our team is not very large, and the way that it works is that it's a tight-knit team. We've sort of identified, like I said earlier, if we wanted to attract the right people, then we had to be those right people for the people that we're trying to attract. And that has worked out for us. It seems almost mystical, but honestly, it's really logical when it happens.
Absolutely. Any specific learnings in terms of how do you look out for these people? Any specific traits? Anything that helps filter out, the good from the bad, and how you kind of like attract the right set of people?
So initially, when we sort of set the foundation for One Finance, Keval and I, we spent a lot of time contemplating on the values, vision, mission, and culture. We call it the VVMC sort of framework that we've adopted. And we articulated each aspect of our culture in a way that can be understood easily amongst the team members.
Can you share those?
Yeah, sure. So our two core sort of values are honesty and fulfillment. Right. So our vision is therefore, to be an honest institution that provides financial well-being to its customers and a fulfilling journey to all those who help create it. Right. So when I say fulfillment, it's not just financial gains.
Right.
It's having a purpose to your job and to your role at the organization, being paid well, not just fair, because fair again is a very demand and supply kind of a thing. It can be fluctuating, anyway. And fulfillment in the sense of purpose, in the sense of compensation as well, and in the sense of camaraderie within the office, right, within the spaces that we spend our time in. In fact, I did a calculation. You spend, as a adult, working adult, you spend almost 60 to 65% of your active hours of your life
workplace.
at the workplace. So might as well make it meaningful. And
Absolutely.
so this is what we've tried to do. We've tried to make it meaningful, not unnecessarily, how do I say, fancy or exciting. Not just putting a sort of pool table in the middle of the office or having parties every weekend. Not that sort of a way. Not a pretentious sort of way, but a very meaningful,
Got it.
enjoyable, exciting sort of way.
Got it, got it. Very, very fascinating. I especially like the part around, honesty and fulfillment. That goes to show how that translates to the organization and what you stand for. Coming to the other side of the business, like there's a lot of chatter around how, building a consumer fintech business traditionally or in the new age has required a lot of high CACs, right? Acquiring the customer has meant spending a lot of marketing dollars, and then retention or deriving the revenue pool from them has not been meaningful enough. As a bootstrap company, building in, let's say personal finance in fintech consumer, how do you go about, customer acquisition as a specific problem statement, especially because from what you said, it requires a lot of education, a lot of awareness, a lot of trust factoring. How do you go about that piece? And the second leg of this is, since you've been able to, work with early customers, understand what they feel, if you can share any practical insights that you did not expect but have received from the customer on how they've dealt with finances, I think that'd be very, very interesting.
So on the customer acquisition side, right?
Sure.
So see, on the acquisition aspect, for us, I mean, I spent a lot of time initially understanding go-to-market strategy and, the TAM and SAM and SOM, etc. All of that sort of mechanized metrics of the startup ecosystem. And what I realized was the fundamentals, if you focus on the fundamentals and are following only on achieving those fundamentals and the input to achieve those fundamentals, then you will be on the right track. So the way that we manage and look at customer acquisition cost is that we know for a fact that this is a need that people have. We just have to stand where people may face this problem and we'll be the obvious choice. Right? So that's one way to bring your acquisition costs very low, one way to look at it. Two, there is no, we are not building for millions of users. Right? Although there are 200 million families that we're looking to impact with our financial well-being sort of motto and vision. But in terms of a customer segment, we're looking for a very small group of customers who require this service, right? And we're not looking at creating a very large, millions of, because India doesn't have millions of customers who are worthy enough to receive those services and need those services and are willing to pay for those services. Right? So that will be a very different business model.
Correct.
Another way to look at customer acquisition is we want to build a solution that customers actually value. Once you do that, the word of mouth kicks in. In the startup world, the problem starts to happen when you have the pressure of quarterly numbers, monthly numbers. And that's bound to happen if there is external funding.
Right.
Now, I don't qualify to speak much on external funding per se because I haven't, my company hasn't received external funding, but I do know that there is this sense of pressure that you need to show monthly numbers, quarterly numbers, and they have to be going upwards. Right? So, I think not having that pressure has helped us a lot focus on the fundamentals.
Fair.
And because of that, we've been able to have a very, very good CAC in terms of, and we're still building, but there's still, a direction and a sense of understanding that we've built.
Got it. And on the insights from, just early customers, what are they saying? What are things that maybe you've been surprised to understand from an on-ground perspective when it comes to financial planning?
I mean, tremendous demand for financial planning. There was a customer from Bangalore working at one of the large, tech companies, India-based tech companies. And in fact, he is a CFO at one of those tech companies. And his finances were extraordinary good. His net worth was also excellent. He just needed a second opinion on his extremely well-managed finance. personal finance. And that was something that was very surprising. That even though you're qualified, even though you're doing all the right things and you can see it in numbers, you still want an unbiased, objective, scientific view of your financial self so that you are clear and you have peace of mind. So the aspect of peace of mind is something that we exist for, right? Like, of course, people are spending time and energy on earning for themselves and their families. But at the end of the day, when they go to bed, they want to feel at peace. They don't want to feel like they have some large loan that they need to pay off, that they may or may not afford if their job is at stake.
As I, think about the next aspect, you've spoken about not, being a bootstrap company, considering the culture that you come from. Have you considered raising venture money? And if yes, why haven't you done that?
So, I mean, very fortunate that, I come from a family that is very well in terms of capital.
The capital efficiency.
Right, and capital efficiency is great. So, the family has been very supportive in that sense.
Got it.
And they've realized that this business requires patient capital. And patient capital means that, the capital is deployed in a way that when you're creating a market, when you're creating a way that something is done, a new way that something has to be done, it's going to take time and energy. So, in fact, when we launched in the last, 1.5 years, we've received a lot of requests from venture capital and private equity firms, and we've happily engaged with them, etc. But we don't consider that this business requires external funding.
Got it.
And we'll see how things turn out. But we're very focused on the fact that this business requires patient capital. This business isn't overnight sort of millions of app downloads kind of a business, because that's what is incorrect in the way that financial planning or financial management has been done in India, right? Especially in the fintech space. Either you're an infrastructure provider, wherein it's a very different game, but when it's a financial solution, the moment you put external funding and user growth and all of that,
incentives get misaligned.
Exactly, and that's the core problem. The fundamental issue in finance is misaligned interest and incentives between the customer and the service provider and the distributor.
Right. In this business, in what One Finance is trying to do, how do you align the incentives? Is the revenue model linked to success? If yes, what is success defined as in financial planning? If not, how do you go about it? Because especially in financial services, the sector is externally impacted by such ever-changing regulations as well, and there's so much happening. Nobody could have predicted a COVID-like scenario either, right? So how do you
Sorry.
So how do you sort of stitch it all together?
This was very core to the business model of One Finance, right? We wanted to ensure how can we design a business model wherein the customer's interest is always at heart, and the business itself exists for the best interest of the customer, right? So the way that we look at it is our revenue model is very clear. We will be charging a certain amount from the customers for the consultation services that they receive.
Okay.
Right. For example, we're all used to paying fees to our CAs, right? Because they're professional services that you get for the time and value that they bring.
Absolutely.
Same goes for your doctors. You don't go comparing fees of your doctors. You go to someone whom you trust, who is reliable and gives you very good, clear service, and who knows you very well, right? You can't easily trade that. So for us, it's clear. I mean, you'll pay One Finance for the service and for the consultation that One Finance provides end to end, right? Similar to what, say, Practo offers in that sense. Our advisors are independent practitioners and practice owners. They advise customers of One Finance on a very clean arrangement, right? So there is no misaligned interest and incentive there. We don't tell our advisors that if you pitch them, we are manufacturer agnostic. So we are not empaneled with any financial instrument manufacturer, whether it's an asset management company or whether it's a loan provider or any of the other. So that itself removes that whole aspect of me as a business facing, feeling that I'll earn more if I sell you more.
Correct.
And that's the fundamental problem. We've seen in financial instruments, distribution businesses.
And these are not, they are also not incentivized to do more consultations or anything of the kind.
Just adequate, just the right amount so that we are able to manage customers' expectations and give them the right solution.
Got it.
Because if you need 3 hours from me in a quarter and I'm giving you 1 hour, your needs are not met.
Right.
It's just to meet that amount of time and energy so that you are able to receive the right sort of solutions. Because you may have questions during the quarter. You may have concerns that have something that has happened and changed in your finances this month. You may want to consult the advisor. Right.
Got it. I think that covers the entire spectrum. We've discussed, what is the background that makes this engine running. We've discussed what CAC is, what distribution is, how the business model works, and about the funding piece as well. Coming back to, some of the crucial fundamentals of how you think and maybe are building this new age business in a very interesting space, and maybe we can end with that segment. I think it'll be crucial to know how your perspective on maybe decisions have changed, right? Considering that you're relatively young, building a business from scratch, having seen, a group that has generated a lot of economic value, how has your decision making when deploying capital, taking risk, setting up fundamentals at One Finance, how has your perspective changed from when you started to where you are right now?
So look, when I started, of course I had an experience of an investment bank when I was in the US, when I was studying and after graduating. But I joined the family businesses in 2017. And it's very easy to, come from the outside and be like, oh, this is not being done better, it could be improved. But when you actually, I was very clear, if I don't create something myself, then managing something of that scale and value is not going to be something that I'm going to be good at. So that was one of the first reasons why I was very clear that I want to start something of my own, although it's part of the greater group. So much has changed, right? In the past 2 years itself, there's so much that I've learned. Throwing money at problems doesn't work. You can't pay your way through challenges in a different way, putting it in a different way. What do you spend your money on and how do you spend it becomes extremely important. Not just coming from, a privileged background, but even for a business, ultimately it's cash flow, it's a balance sheet. How do you manage various priorities within the business? What sort of difficult decisions, that you'll have to take? Because ultimately it's your reputation that's at risk. We are going to be answerable to the board, right? And the board's going to ask us questions about how you've deployed money, what has come out of that deployment of capital, right? And it has to be tangible. It can't be a narrative. It can't be a story.
It can't be future.
It can't be future. And exactly. Rightfully so, right? You use foresight to be able to direct the team and yourself on this journey, right? When you're building a 0 to 1 business.
Absolutely.
Wherein there is no other comparable business that's there today in what we are building. Otherwise, it's easy. The dynamics of the larger sector within which you operate is also something that's going to apply to you. But here, that doesn't exist. So how do you benchmark yourselves? There is no benchmark. When you are creating a benchmark for the industry in certain ways, how do you go about solving for that, looking at that and all of that? So that was very important to know and understand. I think other than that, just stepping outside of your comfort zone, knowing that you will face failures, taking some tough calls, even though many people around you may not agree with it, because the path of least resistance seems the best path forward, because there's not much immediate consequence. The consequences come after. It's in the future. So at that point, it feels like just do what the majority of the team thinks, or so on and so forth. But to be able to, so I've been very fortunate that I have a co-founder like Keval who who is on ground, always focused on, and has the wisdom of having those experiences through various organizations in his career. That we have a very good balance in terms of, if one is being too dreamy about something, the other one says, but what are the nuts and bolts of this, right? How do we really make it
balance.
happen? Yeah, there's a lot of balance.
Talk to us more about that, maybe, like what are the complementary skills that, between you and Gay will get covered? How has that dynamic really benefited the organization? Because very often on the podcast also, I've seen, founders really appreciate the value that another co-founder brings on the table, because this is a lonely journey, as they say. It's a hill to climb. How do you navigate it, and what is this dynamic like?
Fortunately, I think Keval and I have a very similar way to look at our values align,
Nice.
most important, without having discussed those values.
Yeah.
So that becomes essential in how we manage our day to day. I'm someone who when gets excited about something, I make sure that I don't leave any stone unturned to make that a reality. And he's someone who's a little more strategic in making that a reality, because he comes from executing and working with a lot more people. He has 15 years of experience under him in financial services, and also his background with his family in trading in sort of, with the large FMCG corporate. So I think there is a very interesting fusion of skills and mindsets that comes in.
Got it.
And I think we're both very relentless in terms of what we want and what we think the vision of this institution is. So having that, we're always very clear, and we're always very clear that, we're always on the right direction. The way to get somewhere might change, but the final sort of journey is very clear to us.
Got it. Makes a lot of sense. Why don't we also, so the other thing that I've done on the podcast is very often talk to product first founders, right? And then there is this often distinction between how a product company needs to function vis-a-vis a services company needs to function. What, in my opinion, One Finance is maybe an amalgamation of the two. What I'd love to understand from you is what this difference in mindset really means, right? Like, you have to sometimes approach problems with people, right? Like, you have to build a holistic solution, which might take more time, but it's more fulfilling. So how have you seen this distinction between a services first company versus what you've heard about or experienced with product first companies?
Nice. So, I mean, this is something that I also had to learn, we also had to learn over the past couple of years. Because our peers who exist in financial planning and personal finance space, most of them approach it with a product first approach.
Right.
And having closely observed that, studied that, we know that that's not the best approach for this problem and challenge at hand. So luckily, unfortunately, I was so engrossed and inspired by service design, that I studied it a lot. And I understood that ultimately it's the job that the customer wants to be done that's important, not necessarily what's the fastest, quickest way as a business you can get them that job done. So there has to be some level of understanding of those nuances that have to happen.
Okay.
The larger sort of ecosystem of financial advice also needs to be understood. The challenge itself is instant gratification with personal finance and financial management. You want to do something now, you want to keep doing something to feel that you're doing something and feel like, okay,
it's happening.
It's happening and it will
There's
happen.
motion, yeah.
But the answer to this is delayed gratification and effective planning, right? And then managing your behaviors through those moments in time.
Yeah.
So we know that service and product is what is required in a combination for this problem to be solved and for this journey to exist on a long-term basis. It is not a calculator-based approach. It's a consultative approach with the use of the right tools and technologies on an ongoing basis. So even on our app, there are no notifications, there is no delta, percentage change movement that you will be shown in your portfolio value, etc. Because that's not something that's exactly anti-solution, right? That just makes you anxious. Oh, should I do something about it? And overacting is what actually creates the problem than not acting.
Got it, got it. Very interesting. One fundamental question to ask, right? Like, considering that wealth is such an important portion of somebody's life, why do you think there is a dissonance between the time or effort an individual takes in getting professional help for financial planning versus themselves doing it? Like, is there a fundamental reasoning that is an insight to one finance that generally does not happen? Because it seems like this ought to be a very important challenge that everybody ought to eventually seek help for, but is not happening enough of. How do you maybe, get all of these things together?
See, I think because, like I said, there is a lack of a understood standardized approach to financial planning in India today. This is one of the reasons.
Okay.
Right? So before UPI and the likes of PhonePe and Google Pay, UPI payments weren't
As common, of course.
as common. In fact, even cash on delivery. Think of what cash on delivery did to the e-commerce ecosystem. So the way I see it is, once enough people get used to financial planning,
it will snowball.
It will snowball, and the word of mouth will spread because it is the right way for it to be done.
Got it.
So far, people have been doing it in a very ad hoc, fragmented manner, and unfortunately, that's just how it's been. But there are people in the financial services space, like your banks, your other financial institutions, who cross-sell and upsell products to you, and you feel that okay, that's what it means to be financially well in terms of your. So there is a difference between accumulating wealth and having financial well-being.
Yeah, what I'm hearing is there are no good enough alternatives that we now know of, and until we get this delight moment, we don't know what a better alternative is.
Correct.
Thus, there is a lack of maybe participation or awareness in financial planning. Awesome, that's very interesting. As we conclude, it's been very, very fascinating to know your journey, but maybe let's get to a couple of other crucial thinking parts. This is more of a light question, but I started asking founders this. If you had to describe how your family would describe you and how your employees would describe you, what would they say?
I think what I get from my team is that I'm more calm.
Okay.
From the family, I get that I'm a little more stubborn.
Okay, yeah. Interesting. The other aspect that I really think is very fascinating that founders do best is, manage short-term execution with long-term thinking. Considering that there are times where your context is usually higher than anybody else, and so planning for the future is a very imperative sort of thing. Also planning for what the next steps are. How do you make this happen, right? Short-term execution and long-term thinking.
I think within short-term execution, a lot of insight comes, and with that insight, the long-term
stitches
together. It's a more organic process, I think. It's not a very methodical thing.
Scientific.
It's not very scientific. I mean, if you were to, we've experimented this. We tried to sort of implement SOPs across functions.
Yeah.
It's always a chicken and egg thing. Do you start with the SOP or do you create the SOP?
Yeah.
What happens, and it'll never happen that everything is perfect. Like you have all the right information, all the right people with the right skill sets and the mindset to work on the problem and the solution. So this is an ongoing journey where you have to continuously adapt. This is why Agile came into existence, right? Like we in fact scrapped our first app and rebuilt the entire app because that was just not ready, and it was completely different from what we had envisioned, and so we had to take such tough calls because we knew we have to go with what's right and what we know for sure is right, rather than saying no, time to market is important, just go to market with anything that you have.
Yeah, what I'm hearing is it's not ideal to have everything like in process oriented. You need to have some things which are organic. Awesome. The other interesting aspect is also founders are in a position where you have to act, you have to absorb, and you then also have to retain so much of it, reflect perhaps, right? Is there any ways in which you focus on your productivity, your scaling, which is more tactical in nature, because a lot of young founders end up listening to such a conversation. What would you tell them when it comes to what the founder life entails and how you keep yourself on your toes always?
There is no such thing as balance, right? If you're building something for a group of people, it's going to be imbalanced for a long period of time. So make peace with that.
Yeah.
Also, be very careful to whom you listen to. Critically assess whether the person whom you're listening to has any sort of stake in the outcomes that you're going to face and the challenges or the journey that you're going to go through.
Talk to us more about that if you may, right? Maybe spend a minute on how do you assess that bit, because in a world where information overload exists, there are so many folks with exhibited knowledge, right? How do you filter out the right advice or right mentorship, and how do you select the people you surround yourselves with?
So one thing I would share, which is something that we built over a long period of trial and error and making mistakes, is work with other founders. And ensure that you matter to those founders.
Right.
Otherwise, you're just an account that the company is giving services for.
Yeah.
So if you work with other founders whose reputation, whose emotional investment is also with your business that you're building to some extent and to a great extent as possible, then that alignment will happen, and that individual who's your partner will ensure that they give it, their all to make your challenge or your business that you're working on a reality, and the piece that they're working on a reality. Because it's impossible for a finance specialist to understand, even for a business person, right, to understand technology, to understand infrastructure, to understand financial markets, to understand marketing. There's each facet of business is a universe in itself.
Yeah.
So you might as well ensure that the person that you are aligning with has that emotional investment and is a founder themselves. That's one of the only ways that I've seen, that it's worked.
Got it. Awesome. I think this has been amazing. For the last question, I think which will stitch everything together, and this is something which may come across as stereotypical, but I'd love your thoughts. We spoke about how you have evolved over the journey of building One Finance, but if you could go back and, with all the wisdom you now have, transform some things, do a couple of things differently, what would they be? And the second part to that is, considering that, you're at this mission, which seems very audacious, which seems like a tough problem, it's a large market, what is that single thought that keeps you motivated to build finance out for the future? These two things.
Sure. Something that I would have done differently, would be that, I don't know, I feel like those experiences were important to get me to where I am and where we are, right, in my journey as well. So if I hadn't gone through those experiences, I don't know if I would...
You should be here.
I would be here. So...
Fair.
So I wouldn't say there's anything specific that I would want to undo or redo in that sense. What was the second question again? If you can
the final motivation, the one motivation that keeps you going as you build One Finance.
See, honestly, you can call it, I don't know what you call it, but there has always been this desire to leave a place better than you found it. And something innate that has always driven me is to make an impact. And it has always been my dream. I don't know, it's inculcated or through my experiences to build a social enterprise. When I say social enterprise, people often think it's a NGO. So socially profitable enterprise is something wherein socially there is a positive outcome.
Right.
Economically for the business and for those who are part of the business also there is a positive outcome. So not that it's a loss-making enterprise. Even an NGO cannot be run in a loss-making way.
Yeah.
Because ultimately the people who are working and running the NGO need to be paid.
Right.
They have families who have aspirations, etc. So there is that aspect, and having been fortunate enough myself, I feel like it's my duty in some sense, to pass on whatever value that I can to a group of people who I think I'm most worthy of helping. And helping in not in a sense of being benevolent or being giving, but in a commercial environment. To maximize my potential, because ultimate fulfillment comes only through maximizing potential. It doesn't just come through meditating and being at peace and not doing anything, because achieving peace of mind, the best way to achieve peace of mind would be to not do anything, because then you'll just float through life, right? But then you won't get to enjoy the various facets of life in the same way without going through those challenges and facing difficulties as well.
Got it. That's awesome. I think this is a great end to what's been a great conversation. For me, the very interesting thought has been how you retain those fundamentals of building businesses and apply it in the current manner, targeting a very tough problem statement and hopefully achieving it very soon with all that One Finance is doing. Thank you so much, Jeet, for being on the show. It's been a pleasure hosting you. Hope you had a good time.
I had an amazing time. Thank you, Jivraj. Appreciate it.
Thank you.
Thanks.